Good evening, everybody, and welcome to this evening's webinar about the Brexit debate, which is obviously a hotly contested topic. There's been quite a lot of coverage in the papers of recent, and we thought this evening we would do an update based on what it means for us as landlords rather than just generally. For those of you who haven't been to one of our webinars previously, the way it works is that you can hear us speaking, and you can see my slides on your computer screen, but we can't hear you. So if you do have any questions or comments that you would like to make, please do use the chat box that's on the right-hand side of your screen and send anything through to us. We will try and answer as many as we can in the Q&A session at the end. And if you've got any comments, please do send them through as well. It'd be much appreciated indeed. For those of you who don't know me, I've been a landlord for the last 16 years, and it was off the back of being a landlord that I wanted to set up UPAD, which has now become the largest online letting agency. We have helped just over 20 landlords find tenants, and we offer all the services that you get from a traditional high street agent, but on an a la carte menu. You can just choose the bits that you want as and when. And anybody you speak to is ALA accredited, and they're here 7 days a week, 8 to 8 Monday to Friday, and 9 to 4 on the weekends. And on Trustpilot, which is the equivalent of TripAdvisor but for estate agents and other things, we've got a 9.4 out of 10 score, which is fantastic, and I'm really proud of what the team have got us to. I'm very honoured to be joined this evening with Tom, who runs LandlordZONE, as I'm sure many of you know. Good evening, Tom, and thank you very much indeed for joining us.
Evening, James. Nice to be with you.
Clearly, Tom knows so much about the letting space. He's frequently talking at various landlord events up and down the country. There is an article he's put together actually on his own thoughts on Brexit and what it means for us as landlords, which I will be sharing in a minute. But Tom, thank you very much indeed for joining us.
You're welcome.
I'd like to start, if I may, by doing a quick poll. Well, one of the negatives, I suppose, of doing a webinar is we can't see you and know who we've got in the room, as it were. So if you can kindly select one of those options, one of the 4 options you can see in front of you, and then press the submit button, that would be much appreciated. And then we can get a steer on who we've got in the room. Hopefully everybody's had a chance to do that now, and I'll just bring up the results. So generally we've got people that are fairly experienced in the room. Thank you very much indeed for participating. It's really appreciated, and it gives Tom and myself an understanding of who we've got listening in this evening. So going back to the slides, what we're going to cover off for the next 45 minutes or so is the following. We're going to talk a little bit about mortgage interest relief, which is coming in and what that means, and also stamp duty changes that came through earlier this year. We're going to talk about affordability tests in regards to mortgages and what I think that will be meaning. We'll talk about interest rates. Clearly there's a rate decision on Thursday that everybody is very much of the view that it will be a decrease down to 0%. We'll talk about cash at bank and why I think cash is king, and it's a good opportunity to look at remortgaging your portfolio, releasing money if you can to take advantage of the uncertainty that we're entering into. We'll talk about the EU mortgage derivative. Whilst we're clearly going to be coming out of the EU, the time span for that is not going to be the next couple of weeks. It's going to be a few years at the earliest, and I think it's important we talk about that. And we'll talk about tenant demand and affordability of tenants and what things we as landlords should be made aware of. And we'll finalise looking at key business costs associated with being a landlord. But just mortgage interest relief, and obviously there's been a lot of noise about it for the last year or so. Personally, I think it's very unfair, and just as a top line, the way this is going to work is that the interest that you pay on your mortgage on an annual basis will be taxed. It will come in over a 4-year time frame from April 17, and it's tapered, so the full effect of what George Osborne very nicely put forward to us won't take effect until 2021. But what we have done is put this calculator together. If you make a note of the web link at the bottom, we will share that again after the webinar if anybody doesn't have a chance to write it down. But if you go to that web link, what you can do is put in the amount of mortgage that you have, the interest rate you're paying, and what tax band you fall into. and it will calculate what your additional tax charges will be for each of the 4 years as the mortgage interest relief comes into play. And I think, as far as I'm concerned, it's just very important that we are all aware of what our future costs will be. I think some landlords have got their head in the sand a bit, and I think it's important to be aware of how your business is going to be operating in a few years' time, rather than ignoring it, because it's something that, you know, as everything stands at the moment, going to be coming through. And the other key change relates to stamp duty that we saw come through earlier this year. This affects either buying a second home or a buy-to-let property as an individual. You can see for the average buy-to-let property that's purchased for somewhere between sort of 150 and 200-ish, the additional tax of about £5,000, I don't think necessarily puts anybody off. I think above that amount, and in particular in London, I think it's an increasing burden that clearly is going to have a factor on how many buy-to-lets are purchased. One thing to note is that when you do sell the property, you can offset your increased stamp duty against your capital gains tax. So there's a slight silver lining within all of this, just to be aware of. Tom, is there anything you want to mention as far as stamp duty or mortgage interest relief?
Stamp duty, I think, as you say, I don't think it's going to worry people over much. I think the biggest worry is the tax relief. The real sting in the tail with this tax relief is the fact that you cannot claim the mortgage interest against your profits. In effect, what it is now a 20% tax credit, which is entirely different to be able to claim it as an expense. So, although it sounds like, you know, it's not going to affect people too much, it will have an effect, although when you look at the actual amounts of increase in tax, unless you're on a very high, highly geared mortgage, then it's still affordable, I think.
Yeah, I mean, morally I have an issue with it in the sense that running UPAD, let's just say I take out a loan for £10,000 and I'm charged 10% interest, i.e. £1,000 a year. That £1,000 gets deducted from my gross profit to generate my net profit, and then I'm taxed on that. But it isn't going to be the case from a landlord's perspective, and morally I just think that's different to how companies operate. Just doesn't sort of sit well with me. But
exactly, yeah.
It's one of those things.
There's a lot of talk about incorporation and forming a limited company. It's sort of borderline whether that's worth it in many cases, so that's something to be aware of.
Yeah, indeed. Thank you for mentioning that. So moving on, affordability tests. So I think the mortgage market is going to change quite dramatically, and I think we're in a period of change where actually banks are generally in a very good position. They've got very healthy balance sheets compared to where we were when things went very wrong a few years ago. And they have a real appetite for still lending. They sort of have to lend. But I think how they lend is the key factor from my perspective of what's going to change. And I think there's a few things they're going to be looking at. I think the income requirements, some lenders historically didn't need you to have an income or had a minimum income of £15,000 or £20,000. I think that's going to change. People like Barclays, I think, have introduced or are introducing a 50k minimum income. I think the rental cover, when it used to be the norm of 125% as a stress test, is being increased by companies like the Mortgage Works, which is clearly one of the main lenders, to 145%. I think some of the loans are going to be stress tested at a higher rate. So rather than being stress tested on affordability based on the pay rate, which might be 2.99%, for example, it's going to be stress tested at 5.5%. Some lenders have already started doing this with the view that interest rates will be increasing at some point in the future, and they want to be sure that for a 2 or 5 year term, the person taking out that mortgage can afford it as and when interest rates do start to increase. And I think one of the other big changes is we've probably all got used to the mortgage expresses of this world, where it was very easy to take out a mortgage, very little questions asked, but also it's quite commonplace to have a further advance. So as your property's gone up in value, it was easy to extract money to pay for renovations, pay for another buy-to-let, for example. And I think this is going to change quite a lot over the next 5 years, where it may not be the case that we can actually take out a further advance. We may be going the other way, where we would need to put in 5K, 10K to move to a new lender or to keep with the existing lender as they become more stringent on the loan to values. The idea that 85%, which was very much the norm a few years ago, will continue. I think 65% is very much where everybody would like to go to, with several still doing 75, but I still see that going to come down a bit. And I mentioned earlier about why all these changes. I just think there is an appetite from banks to lend, but under the right circumstances. You know, they don't want to be giving money away as freely as they have done before, partly down to the legislation and partly down to just cautiousness, I suppose, within the marketplace. And I think finally, before I sort of pass over to Tom, is, you know, at the end of the day, the cost of debt, the cost of mortgages is probably as cheap as it will ever get right now. And it's probably an opportune time to look at your portfolio. It may be the case of paying an early redemption fee might even be worthwhile, because the net of net is that you may be better off by doing so. Tom, is there anything you wanted to add to that?
Yeah, well, I mean, interest rates are very low. Competition between banks to lend is quite high. Government is looking at this overall and thinking so much money out on loan for the buy-to-let mortgages that they're worried that basically if there is another recession, the banks could be in trouble. So this is really just a cautious action to stop too much money going out on loan, I think.
I think Tom made a very good point there, that the amount of lending for buy-to-let mortgages as a percentage of the overall market has been increasing quite rapidly in the last couple of years. And I think the Mark Carneys of this world are sort of concerned by that, and whether that bubble could burst, I guess, Tom.
Yeah, exactly.
So moving on, in terms of interest rates, you know, there is a view, will they ever increase? You know, we're on the eve of a rate decrease, I think, is what is likely to be happening. But I think it's wrong to assume that we're going to be in this era of 0.5%, 0% for the future. As a landlord, I think we're all doing this for the medium, the long term. And I think just to think about what's happening for the next couple of years is probably a bit short-sighted. And I think we should be having an understanding that rates will increase over the next few years, certainly not for the next few, 2, 3, 4 years, but certainly beyond that. 3.5% seems to be a sort of the right level that the UK can support, but clearly that's not going to happen tomorrow. And I think that and the cost of your debt and these new tax changes are areas that as landlords we need to think about, which does sort of feed in nicely to sort of cash at bank. And what I mean by this is cash is your king. You've got money that's quite cheap at the moment. As Tom mentioned, there's a lot of competition amongst lenders to offer good rates and attractive terms, albeit slightly cautious about things. And maybe it's a good opportunity to see this as an opportunity to build up a war chest on the basis that even if we weren't coming out of Europe, the amount of investment businesses have been making has sort of halved in the last 12 months compared to the 12 months prior. The market, in terms of new cars, has very much been in reverse of recent, and there's more and more restrictions for first-time buyers in terms of the loan to values that they can get, and also that void between the growth of house prices that have been pretty much twice the rate of wages over the last 3 years. That's being sort of countered by interest rates coming down over the last 10 years or so, but it's going to be a big restriction for them getting onto the ladder, as it were. So I do wonder whether there's an opportunity for people to create a war chest to take hold of opportunities. There's noise that house prices generally are going to face a downturn, I think especially in London, probably more so than ever before. And I suppose just from a first-time buyers market, some of friends of mine at eMoves have put together these two charts of what the average first-time buyer price is, either by borough in London or across the whole of the UK. And I think what you can quite easily see is that 196k has been the average for England, and 440k 463,000 for London as the average first-time buyer price is a huge amount for people to raise deposits on, with or without the bank of mum and dad. And I think the marketplace is going to change, and maybe it's an opportunity to take advantage of that. And I think just finally, I think we will be seeing reductions in house prices. I think there will be a regional stance to this. So what happens in London is going to be very different to, for example, Exeter, Bristol, that have been growing quite rapidly in the last few years, and then other towns like Huddersfield, Nottingham, that have basically got house prices similar to what they were nearly 10 years ago, for example. So I think rather than taking a general view, we need to be aware of what's happening in our locality or where we're operating, and also sector specific. So if you are letting HMOs, individual room lets versus family properties, how each sector within each region of the UK operates varies enormously. And I think more than ever before, we need to do our due diligence rather than just relying on national statistics. Tom, is there anything you want to add to that?
Yes, yeah, you just got to look at the area you're in. I think London particularly is, affordability is the issue for tenants. And if you compare London with Manchester, say, salaries in Manchester are probably 70% of those in London, whereas the house prices are only 20 to 30% of the price of the property in London. So you've got a big difference there, and more affordability in these regions.
Yeah, and I think it's, for those of us in London, me included, there's very much a bit of a bubble going on compared to what's happening in the rest of the country. And I think it's important to be aware of the larger landscape rather than just actually what's happening in your locality. So the EU mortgage derivative, so this is something that is coming into force. Clearly, whether it gets reversed in a few years' time as we come out, we'll have to sort of wait and see. But this is very much more for accidental landlords rather than people that can show they've been a landlord for a long period of time, they've got a portfolio. And it basically means that when you're taking out a buy-to-let mortgage, the criteria is going to be similar to what it is for home owners at the moment. Increased due diligence that gets done, what you're spending your money on, what you're spending money on, food, etc. And there's going to be diligence than the olden days in terms of Mortgage Express, self-certification, etc. And I just think it will become harder to get a mortgage in the future, certainly on the same terms that we have been used to in terms of loan to value and the rental income stacking up to allow you to borrow more than what you had done previously. And I think it's just being aware of these changes rather than just thinking that, oh, well, I'll just remortgage in 3 years' time, take out another 20k, for example, and carry on. I think the marketplace is going to be changing quite a bit. Tom, is there anything else that you're seeing before we move on to sort of tenant demand?
I agree with what you said there. I think it's going to be quite hard to enforce how do you decide who's a consumer, accidental landlord, and who's a serious buy-to-let investor. That's going to be quite hard to determine, I think.
Yeah, and I don't think anybody's actually done that yet.
No.
But yeah, you're absolutely right. I think the one thing that is pretty certain is that the demand from tenants is going to increase quite dramatically. We've already seen at UPAD the amount of inquiries we receive per property has risen nearly threefold in most areas over the last couple of years. What we're seeing is the overall quantity of tenants increasing. We're seeing them move more frequently due to changes in circumstances, and we're seeing them stay a tenant for far longer than ever before. The age that people get married and settle down and become a first-time buyer has been increasingly pushed back and back. And so overall demand, I think, is going to increase for the next 5 to 10 years. I think one trend that we're seeing is the growth of holiday lets and single lets. Holiday lets I mentioned because travelling overseas on holiday is going to be increasingly more and more expensive in terms of euro price, but also for overseas people to come to the UK is going to become cheaper. It has already. And I think as far as single lets are concerned, there are a growth of people that are living on their own. One example I would like to mention is there's a flats that I rent out in northwest London, Zone 2. I currently let it for about $2,300 a month, which means, and it's for a 3-bed flat. So each tenant is paying something like £800 a month at the moment to live there. What we are seeing is wage inflation being pretty much static or going down over the last 10 years, but rents have been growing at about 3.5% per annum. And I think the affordability factor, and in my particular example for this particular flat, in a few years' time, the rent per tenant for that 3-bed is going to be nearly £1,000. And can a tenant actually afford that? There is this safety net that somebody's rent should be no more than 30% of their take-home pay. And there was a report that came out recently that in London, the average percentage of someone's take-home pay that was going on rent for young professionals was 57%. Now, I think this is a real brave area for us as landlords, because with these additional costs that are going to be coming through and just making our portfolio work, there's a certain yield we need to be after. But on the other side, whilst there are a lot of tenants out there and that will be growing, can they actually afford the rent that we are going to need to make the numbers stack up, or are they going to be increasingly going into arrears? And we've already seen that the UK average, the average landlord, has about 30% of them have had rent arrears in the last 12 months. And I see that figure increasing over the next few years as this disparity between wage inflation and what rents have been increasing at changing. And I think for me, that's probably the single biggest factor that is an area of concern for us as landlords over the next 5 to 10 years. Tom, do you see anything different from your perspective?
Yeah, no, I agree with your analysis there. Certainly in London, you know, affordability is the issue, as I said before. Not quite so much so in the regions. So tenant demand, there is no doubt it's going to keep going up. Young people can't afford to buy. There's a report out today, isn't there, that rental housing is a much higher proportion than it was of the rental market, and that trend's continuing, I think. I can't see any change.
And I think, just to summarise on this, I think we're seeing the effects of this on people's household incomes. You know, if incomes don't increase, how much they can afford to spend on rent is going to have a huge bearing there. As the percentage of someone's take-home pay going on rent creeps up from 30%, the amount of arrears that are going to come forward is going to change. I think having a guarantor is going to become commonplace rather than just for students. And an interesting thing is the amount of unsecured debt in the UK has grown so much. So this is car loans, credit cards, etc. And the average household in the UK has nearly 10k in unsecured debt. So whereby when you're doing the affordability analysis on a tenant and can they afford their rent, there's other factors that we need to look at about how much unsecured debt have they got, how much they're spending on the Spotifys and the Ubers and so on of this world, rather than just looking at what the rent is and what their take-home pay. I think there's other factors to take into account. And I do question whether, in particular in London, where I think things are sort of going potentially in reverse a bit, are we still going to get the yield required to make things stack up? I have put this sort of flow chart together, which hopefully sort of explains a bit about what we've just been mentioning. And I think as landlords, we're going to find higher tightening of buy-to-let lending. Interest rates will increase over the medium term. We know there's going to be higher tax bills to pay. So there will be some of us that do decide to sell up, which will mean there are more properties coming on the market for buyers, but there will be less rental stock, which fuels this equilibrium between demand and supply. There's way too much demand and way too short supply, mainly because we haven't been building enough properties in the last 20, 30 years. But I do think that these properties that are going to come on the market from landlords selling up aren't going to be those for first-time buyers. They're going to be generally properties in London and the South East where people have high amounts of debt, and the new tax changes are going to mean it's uneconomical to keep them. And that's a disparity between what tenants need as a first-time buyer property. And given there aren't significant house building going on, what I do see happening is rents going up as the quantity of tenants is further fueled by the barriers to becoming a first-time buyer, and even less rental stock than there is at the moment. There's already a massive shortfall, will drive rents up further. To add to that, for those of us that stay in the market, which is, from what I understand, the vast majority, these higher costs that we're all facing, I see it being a similar situation to the way when the price of oil goes up, the price of petrol at the pump increases. We've seen rents in Scotland increase by about 8% last year when tenant fees charged by agents weren't allowed. That's been passed on to landlords, and that's meant an increase in rents in Scotland. So I do see rents increasing because of how this marketplace is going to change. And I think the big thing for me is I do see rent arrears being far more commonplace than they already are at the moment. They've been doubling crudely year on year at the moment in terms of the amount of tenants falling into arrears and landlords having to go through the eviction process. And I think for us, that would be hopefully one of the salient points we've been talking about. Tom, is there anything you want to add to that as well?
No, that's good. I like your chart there. It's very good.
We're trying to simplify, I suppose, everything that's going on. And, you know, it's great that rents are going up from a landlord's perspective, but, you know, there is this other side to it that can people actually afford those rents? I don't think it's just happy days. I think there's a bigger picture that we all need to be aware of rather than just being
I think it does emphasise the importance of credit checks, good screening, selecting good tenants wherever you can.
Exactly.
And paying attention to the eviction process if you need to, unfortunately.
Yeah, and I think the one thing I'd add to that actually is rent guarantee insurance has changed quite a bit in the last few years. I think it's become quite cost effective. So for about 12 months, you can take out rent guarantee insurance for about £140 approximately. We offer it at UPAD, you know, there's other providers out there as well, but I think it's going to become normal for tenants to have a guarantor, and also for landlords taking out rent guarantee insurance, where the cost of it has come down quite dramatically and the need for it has increased quite dramatically too, just to give us that peace of mind.
Yeah.
The last point I'm just going to touch on is, as a landlord, I think there's three big costs that we all face. The first is taxation, and there's nothing really we can do about that. You can mitigate some of it by putting your properties into a limited company, but make sure you're aware of the full picture. Going from just your own ownership to a limited company is a change of ownership, and therefore it attracts capital gains tax. And be aware that when you take out mortgages within a limited company, it's different. It's basically a commercial loan. And whilst the rates have come down over the last few years, they are still generally priced higher than what it is if you're taking out a mortgage in your own name. So just be aware of all of that. But clearly taxation is the largest cost that we all face. That picture of tumbleweed represents voids, which is the second largest cost all of us as landlords face. One really scary statistic I've got was when I was asked to present at Rightmove Start Conference a little while ago, and I mystery shopped 10 different agents in Milton Keynes where we were presenting. And I did this on a Saturday morning, which is increasingly when tenants are looking for their next rental. And to my horror, and Rightmove actually shared this with me, 7 of the 10 agents I inquired about never came back to me. Now, if I was a landlord, I would be so concerned that 7 out of 10 agents weren't following up on potential inquiries. You know, we know there's far more tenants out there than properties, but not to follow up is just straight laziness. And I think when we're choosing an agent, it should be less about whether we know David, who's worked there for 10 years and we're good friends with him, or somebody who's charging the lowest fees. I think there's a bigger picture, and it's about sort of mystery shopping agents and seeing how well they operate from the tenant perspective, so we know what we're buying into, because not replying to 7 out of 10 was appalling as far as I was concerned. And I think the other thing is tenant fine fees. These are the third largest cost as landlords. Online letting agents like UPAD that exist now, they didn't several years ago. And I think by being on top of voids and using agents that respond quickly to inquiries when they come through, whether that's during the day, in the evening, or on the weekend, and maybe thinking about how they're letting their property rather than just using a traditional agent. There's now other ways of getting it on Rightmove and Zoopla, which is very much where tenants are looking. So I think there's things we can be doing as landlords to combat the higher costs we're going to be facing by reducing some of our other costs. and maybe it's a sensible time to be looking at that. I think it's a given there's going to be higher taxation. However you restructure your business, it's a good opportunity now, I think, to examine your costs rather than just putting your head in the sand. You know, there are some substantial changes, as Tom mentioned earlier, that are going to come through, and I think it's important to look at what those effects would be and start preparing for it now rather than the night before, as it were. My also gut thing is that I think landlords should be incentivized to further invest in the rental market. I think there's been too much regulation from within the UK and with outside of it, and I think if there were a sensible proportion of landlords that left the market, whilst the government may be happy about that on face value, the net of it, in my perspective, is that there's already a shortage of housing for tenants. There's more and more tenants coming into the marketplace, and I think it will be tenants that lose out. I think something like 30% of tenants in the UK are going to find the cost of renting substantially harder over the next few years, and I think it's been a political decision to put some of these taxation changes into play, not solely about driving revenue for HMRC, but I think it's a political decision that there's far more tenants than landlords out there. But I have a big feeling that this will backfire if all of this comes through, and I think my personal view is we should be incentivized to bring back into equilibrium the supply and demand within the rental market. Tom, do you think I've gone off on one, or
no,
do you think...
no. Well, it might be wishful thinking and maybe expecting too much, but it would be interesting to see the new Chancellor, others involved might have a rethink on some of these issues. You just don't know.
The fact that he's been involved in commerce previously, and I understand he's a landlord as well, I think there's some plus points there, but maybe we shouldn't put our rose-colored glasses on straight away.
Exactly. On the cost issues, certainly landlords need to be aware of the energy efficiency measures that are coming in. Certainly they've started from 2016, but 2018 every property must meet a minimum of E standard. That could be a cost for some landlords, and you need to start planning now.
Yes, you're very valid point.
Another point is managing your own property. If you can manage and you're not paying agency fees, develop your skills in that area. That can save a lot of money, providing you've got the time and the inclination.
Cool. Thank you, Tom. So I just wanted to finish on doing a quick poll, if I may, about whether you just feel that business will be as usual as far as you're concerned, or I've had enough, pour me another glass of wine and let's sell the portfolio. It'd be really helpful if you could just select one of those three options that you think generally best applies to you going forward. It'd be really helpful just to get a vibe from everyone that's listening this evening on what they think is most applicable. Hopefully everyone's had a chance to select the option that most applies to them and press the submit button. Let me just bring up the results. Okay, so most people are carrying on as normal, which is fantastic to see. The 17% that are reconsidering, I think data that is out there in press releases in the papers at the moment says something like 20–30% of all landlords are going to sort of give it up. So it's encouraging that that's less. That doesn't surprise me, but I think it's just important that we don't have our head in the sand and we're aware of the changes that are going to come about and give ourselves a year or two to prepare for these rather than waiting for the night before. So I just think finishing up, going back to the slide deck, I think it's just very important that we shouldn't be looking at the next few years of the Tory Parliament and at some point coming out of the EU. I think we as landlords should be taking a bigger picture for the next 10 to 20 years. I think it's important that we think like that rather than being reactionary to what's happening today and what it means for tomorrow. And I think finally there's a couple of guides that we've got that you can download from the handout section on the right hand side of your screen. So it might be worth taking a note of those two. And the link for Tom's article that he put together is also on there. We will send that out in an email afterwards as well if that web link is just way too long to scribble down. If anybody hasn't submitted any questions to us as yet, please do use that chat box on the right hand side of your screen and we'll try and answer as many as we possibly can in the next 10 minutes or so. and if it's just comments, that's also absolutely fine. But it'd be really good to hear any questions that we've got. So some of them that we've come through, one person listening in has said, with the new tax laws that are coming through that's going to affect our income, what are our thoughts on getting around this, bearing in mind there are a lot of landlords already trying to offload properties? I think, well, I know first of all that Tom and I are not tax accountants, so neither of us are sort of qualified to answer that directly. I think there are ways of mitigating against some of these changes coming through, and it is worth probably speaking to a tax accountant. There's a firm that we use at UPAD, and I'm happy to recommend them. So if anybody's got any questions or would like to be introduced, please do just send me an email afterwards, and I will connect you up. But I think it's just making sure aware of the bigger picture. Don't think by just putting your property in a limited company you overcome one tax change, because there's going to be other things that take into account. And I think it's important to see a very full and balanced viewpoint rather than just rushing into something. A couple of other people have mentioned, how will it affect smaller part-time landlords with 5 to 10 properties? Well, I think all of these changes that we've been talking about affect everybody, whether it's a room you let out or you've got 200 properties in your portfolio. I think it's looking at all of these changes, looking at what the effect will be for your actual business, whether you're looking at acquiring more properties, where your debt level is, doing the sums on a spreadsheet crudely, and seeing where you want to end up. What do you want to get out of being a landlord, and then making a balanced viewpoint from that perspective. Just some of the other questions that have come through. Somebody's mentioned a comment about one thing that is clear is those people that are incorporating their properties, i.e. putting them into a limited company, have done so, but paid a lot of money in stamp duty and capital gains tax, which the government will then apply to the mortgage interest tax to companies, and probably backdate it by 4 years. So I sort of understand what you're saying there. I don't know whether this is being underhand as far as the government is concerned. I genuinely believe the changes to stamp duty and mortgage interest relief are politically motivated rather than revenue generating motivation. I think it's the fact there's 9 million tenants and 2 million landlords in the UK, and at the time, from a vote winning perspective, it was far easier to side with tenants who are potentially getting an increasing raw deal by renting and the costs associated with it. I think it's a given that we all know that there has been a complete lack of house building in the UK. The quantity of properties we need to build every year, because we've increasingly never get to that amount, there's a growing burden every year because we didn't meet the target the year before. And so the idea of ever getting to equilibrium shifts further and further back, because year after year we've not been meeting our criteria on that thing. So if that sort of answers that particular question. Somebody's asked about foreign investment, particularly coming into London, and will landlords sell up if properties become unavailable? Tom, what's your thoughts as far as foreign investment, whether there's going to be more or less, or don't know?
Well, from what I've read recently, there's very little change. People are not being put off by this. In fact, there could be more because of the drop in the pound, so it becomes a bit of a bargain for some of these Asian investors, American investors, to buy property here. So I don't think there's going to be too much change as far as that goes.
I agree, and I think some of the money that is coming, or was coming in from the Far East, I think from a bigger perspective is to look at other countries like Portugal and Spain and Italy and Greece that are in a very different position to the UK, and it actually may be the case that the opportunities that lie within those countries with cheaper property and other opportunities there, it may be that money is diverted to those countries where there is a greater opportunity than what will be in the UK. But I think, as I did a Brexit debate last week, I actually bought a crystal ball with me as a prop, because there's so much to do with the future that we just don't know about. and I think people can speculate, but actually it does require some time to pass. One thing that I think is very important is that we reduce the uncertainty factor by making decisions as fast as we can. I think David Cameron leaving Parliament and being Prime Minister speedily and having a replacement in place very quickly was really advantageous. There's nothing more that the markets don't like than uncertainty, so the more that can be done to provide certainty in operating speedily, I think is really important for the UK economy and the effect of Brexit and what it actually means. There's been a few questions we've had through that are quite detailed from a taxation perspective. If you'd like me to introduce you to our tax accountants, I'm very happy to. We'll bring up the email, I'll show you the email address now. In the bottom right-hand screen, marketing@upad.co.uk. I don't want to go down the route of answering anything very, very specific because neither Tom or I are tax accountants and we're not qualified to answer it all, and so on and so forth. A couple of people asking, do you think it's a wise move to look to invest elsewhere in Europe with more affordable housing costs? On top of what I just mentioned, Tom, is there anything you'd like to share there?
Well, what goes against you is the strength of the pound at the moment. The euro is quite weak as well, but the pound has dropped considerably, and we don't know what is going to happen as far as measures affecting that when we actually do leave the European Union. So I think, as you say, things have got to settle a little bit before we know what the future holds. And certainly within the first month or so of the vote, it's far too early to say, I think.
There's been a few questions about rents and why they've been increasing quite a bit in the last few months. I think it's a number of factors. I think when there is uncertainty, people go for the safest option, and so therefore if you're looking at becoming a first-time buyer, you might put that off until everything just beds down and becomes a bit calmer. So you might continue being a tenant for another year or two, for example. I think the restrictions about becoming a homeowner have got harder and harder. And I just think as an economy, you've got a growth of people that are self-employed or act as a consultant rather than being employed. And I think job security is very different to what it was many years ago. I think we actually aspire to have that flexibility too, and actually renting fits into a lot of that. So
it does. There's a trend to single living. People are living longer, and house building is far lagging behind. There's no doubt about that. And plus, you've got 300,000 a year, 350,000 a year net immigration. So all these factors have a big effect on demand for renting.
Tom, do you see how rental prices increasing over the next few years, or is there anything that you're seeing that suggests otherwise?
I can't see as there'll be anything otherwise that a slow increase over the next few years.
But I would put this buyer beware situation in that, you know, fantastic, the rents are increasing, you know, happy days, but before we all start cracking open the bolly, the affordability factor is really important. You know, it may be that rents are going to start increasing, but can tenants actually afford it? The second it starts becoming 40–50% of their take-home pay, there's a real area of concern there about whether they're going to be able to pay the rent for the entire 12 months. And as landlords, I think it's something we're really, really aware of, rather than getting very excited by all of that. So do be aware about that. And I think just because of timing, we're nearly out of time. I think we'll just do one more question just to talk about house price changes from the referendum and what we think will happen. I don't think anybody knows, and I think you know, a bit of crystal ball gazing here, but the quantity of properties that are coming onto the market and the amount of people looking clearly is at a low. To be able to value a property is really hard because you don't have as many comparables as we did 5 years ago, for example. And therefore, that combined with the amount of uncertainty in the marketplace about what's going to be going on tomorrow, people's individual job security. If you think house prices are going to fall by 10%, why would you look to buy today? You'd want to hold off for 12 months, for example. But I think my summary on it, before I pass to Tom, would be the quicker the uncertainty factor can be overcome, the less chance of price decreases that will happen in the UK. I do think house prices will go down, I think more so in London, but the amounts that they actually come down by is a bearing on the level of uncertainty and how quickly we get a resolve. Tom, do you want to add to that?
Yeah, I agree. I don't think that people are too worried about that there will be a dip. There is no doubt, particularly more so in London, not so much in the rest of the country. I can see the government having a real rethink about housing now that we've got a new Chancellor, etc. And really, when you think about it, if there is going to be a dip in the economy, one of the best ways to get a country out of a dip is to concentrate on building. And I think putting some measures in to encourage more building will not only boost the economy, it will rebalance the housing market as well. So I can see them looking at that area.
I think it's a nice place to end off. And whilst that's not something you can implement tomorrow and it has an effect by Friday, everything hangs off house purchases. If people are moving more frequently, you're going out buying carpets, white goods, etc., etc. So much hangs off the housing market. There's been, for the last couple of years, a slowdown in the amount of activity going on, whether you look at housing, motor market, investment by businesses. And I think this decision to come out of Europe has emphasised and been the catalyst for things to get worse. I think the government needs to act speedily and concisely to put measures in place, and I do believe taxing landlords is unhelpful. Maybe we'll leave it there rather than me going on a podium on being political on all of this. But I would like to thank Tom. Thank you so much indeed for joining us this evening. It's a real pleasure to have you on webinars. We've done quite a few together. So thank you so much indeed, Tom. I really do appreciate your input.
You're welcome.
Indeed. Thank you very much for everybody that has taken part and given up an hour, 45 minutes of their time. It's really appreciated. There'll be an email that will come out shortly with the link for Tom's guide that he's put together. And if anybody's got any feedback, I really would appreciate it on how we can improve these for the future. And we'll also have a copy of this webinar, so if you came in late for some reason or want to watch again, you'll be able to do so. But I'd just like to thank everybody very much indeed for giving up some of their Tuesday evening. And I wish everybody a very pleasant summer holiday time. All the very best and take care.
Bye everyone.